Your money's not sleeping in the investment account. That's real money that you can never re-earn. So if you don't manage it properly, it costs you money.
Meet Jennifer Pearson, founder of TreasuryEdge and a treasury expert with more than a decade of experience. From leading treasury functions at Freetrade to roles at Norton Rose Fulbright, Johnson Matthey, and Procter & Gamble, she's built her career helping organizations manage financial risk, cash, and growth with confidence.
If you don't have a treasury policy, you're just saying to someone, the money's in the bank, we'll do a budget, we'll not track it too closely, but you do how you feel is best. Imagine if I said to you, Phil, here's my credit card. I have 2 children and a mortgage, but you pay those, please, and feed everyone, and I trust you. And then if something goes wrong, that's my fault, isn't it? I didn't give you the parameters to do that. I don't want you to trust me. I want you to be clear how we should do this together. Let's create a view and let's make a plan.
Well, I think we have covered a lot already. So I'd like to ask you, what is the one thing you want to tell the listeners they should take away from you today?
The one thing you should do is...
Welcome to this new episode of Treasury Leaders. I'm delighted to have Jennifer Pearson, the founder of TreasuryEdge, on this podcast. And if, as a listener, you're a seasoned corporate treasurer wanting to innovate and freshen up your operations, this podcast is really for you. This episode is really for you. And also, if you're a new treasurer or someone in your 20s looking for making an impact in your career and want to know about treasury, Jen is also the right person to listen to and talk to eventually. So Jen, welcome to the podcast.
Thank you.
Tell us about yourself. Who are you? How did you get here?
So yeah, as you said, I'm Jen. I started working in finance, when I was 18. When I left school, went straight into a job and was so lucky to land sort of the undergraduate scheme at Procter & Gamble. And it was amazing because we rotated through different finance departments every year. So we tried lots of different things. And I ended up in Treasury and just absolutely loved it. I think most people who end up in Treasury, it's not necessarily what they want to do. When they leave school, they don't say, oh, I would love to be a treasurer. But I think once you get into it, it's quite addictive. A lot of treasurers who I meet are quite similar type of personalities. But yeah, then I moved to London to continue, treasury, a treasury career, given it is the hub of all the treasury roles, and just moved through lots of different companies, different industries. I worked at Johnson Matthey, which is really famous in London for the Brinksmat heist. I don't know if you've heard, the biggest gold heist ever was from Johnson Matthey Bank. And then, I moved into professional services. And then after that, I got my first role in a startup, which is Freetrade at the time. When Freetrade was really in its infancy. And set up their treasury there and just absolutely loved that whole experience. It's such a cool place to work in that startup environment. And it was so different, from being at like P&G and Johnson Matthey, some of the biggest companies. And I just got addicted to it. And when I was at Freetrade, it was my boss who actually said to me, you should set up your own thing. Why don't you do this? And you go into startups and you establish their treasuries. And he didn't know that I always wanted to be self-employed. So when he said that, I just thought, this is going to be my thing, And I set up TreasuryEdge whilst I was in my first maternity leave. You can see behind me. And we're nearly I'm 3 years in next month. And I don't think I'm going to be going back.
How many kids?
2.
Wow.
A 1-year-old and a 3-year-old. And I do think there's something, I don't know if you agree with this, about having children that just makes you think, life is short, it does make you feel a bit invincible in that sense, and if you want to do something, you have to just go for it. Otherwise, you'll just regret forever, So, that's definitely how I feel with TreasuryEdge and how I approach the work with TreasuryEdge. I've tried lots of different things. We do lots of different types of business and continue to do that. I don't think I've found, there's no need to settle for one thing. With Treasury, there's so many different guises.
And what does TreasuryEdge, or what do you do at TreasuryEdge? Who is your typical client? What do you try to do there?
What I've found is that like there's loads of Treasury consultants, loads and loads, but I don't know anyone who does the type of work that I do. Most Treasury consultancies work with treasurers to do projects, a refinancing or a system implementation or something. But in my space, I work with companies who don't have treasurers, but they have interest in treasury risks. So say an e-commerce platform that sells worldwide and has lots of FX risk, or a Series B company who's raised a lot of money and they want to start investing it, and so point projects that, if they're done correctly, they can be operated by a finance team. But the initial setup, maybe the CFO's never touched treasury before, he's never had to, they've never had to. Often in the scale-ups, the CFOs come from Big Four background, so they have a really good understanding of finance, but not necessarily operational treasury. And it's just great to get someone in who's done it and has a playbook and can act quickly, because the thing that's different about treasury is if you don't manage it properly, it costs you money. Every day your money's not sleeping in the investment account. That's real money that you can never re-earn. So
that's actually something often overlooked. How does not doing treasury cost you money?
Yeah, well, I mean, if you don't negotiate your FX spreads or have a good hedging policy, you're paying a lot of money for your trades, or you're at the whim of the market, and your cost base might go up and down. I mean, as much as 10% really over a course of a year. And then if you don't invest your cash, obviously you're not going to earn the interest. If you're not negotiating your bank fees, you're going to be paying more, and you can't undo those things. So I think there is an urgency in having good treasury ops, no matter what size the business is.
So to recap a second, you got into treasury a bit by accident, fell in love with it, worked for very large corporates, saw how treasury is done there, and started working for smaller startups and fell in love with that even more and decided I'm going to do this for the rest of my life, or at least for the foreseeable future, whilst having kids on the side as well. Quite ambitious. And that's what you do with TreasuryEdge. You help smaller companies, startups, scale-ups do treasury, bringing the big things, the things on how big companies are doing and making them useful for smaller startups. Is that right?
Yeah, thank you for that summary. It was great.
I actually would like to take then insights from both sides, because I think you're the perfect bridge between large corporates and startups. And I think both can benefit from each other's point of view. Let's start perhaps from the corporate side. So what is one thing that a treasurer working in a large corporate can take from a startup, from the energy or from the tech or whatever?
In the startup world, the level of ownership and responsibility is huge. Every single person who you add to that company needs to raise the bar. They need to contribute a lot, well beyond their station. They'll be drawn into all manner of projects. When I think of free trade and the involvement in building the product itself, the FX netting software that we built was incredible. And that's obviously not something an operational treasurer would do. But if you have knowledge, you are expected to give it far and wide to everyone, and feel like you own that company too. Obviously in a startup and scale up, you often do get a lot of share options in the corporate too, but you really feel like this is your company and you're on this mission, you want it to succeed. And that doesn't just span, your work that you do, it's also how you present yourself at work, how you're, I guess, I'm not talking about the social side, I'm more talking about, the leadership that everyone, even from the analyst, the assistant up to the top, they have to present themselves in a way that is like an owner of the company. Your energy ripples through the rest of the business, and that's something that's just in your control. There's no space for someone who does what they're told. Also, there's no one there to tell you what to do, because everyone's so busy. You have to do it yourself. And there is something really cool about being the founding person in your job. Like, you're not going to inherit a load of processes, a load of documents. You've come in to do treasury, crack on. oh, what is that? How often, I mean, you'll know this too in your space. You go to these interviews, say for this type of job, and they say, I'm interviewing you for this job. What are you going to do? Because I don't know what you're going to do because no one in the company has your specialism. So what are you going to bring? And it is a really cool way to work, I think.
So the sense of agency, actually the need of bringing in agency, being the one driving and doing things, no matter the specialty, and rolling up your sleeves.
For sure.
Yeah, I recognize that. Yeah, as the founder of a startup myself, that's what we hire for. We hire for people who have agency, roll up the sleeves and get things done. I really recognize that. And that's what you have learned or experienced from the startup scale-up side. How is it different in a corporate setting?
I loved working in corporate too. I've loved every job that I've ever had. But I think there is a lot of time in reflection in the corporate world that you spend. There's a lot of stakeholder management. There's a lot of people there, a lot of very experienced, very intelligent people who you have to show respect to, in a sense. And that's what you feel like. You have to respect that this is a very established company. There's a lot of thought gone into all of this stuff that we're doing, and it's there all for a reason. But times do change and times do move on. And I think it's a skill to approach those type of situations with fresh eyes and to still have that same mentality of, well, I'm coming into this job and yes, this is all the stuff that we need to do to keep it running, but I'm a different person. I have completely different skills that no one else here has. Even if this is your first job, you have so much more information than the existing people. You've lived a different life in a different era, in a lot of sense. And you have to bring that to your work. And that spans everything from, your personal brand to your work style. And, and you should have the confidence to suggest those changes. And also, one thing that I thought was really noticeable when I moved into free trade was people used to say, I don't know, all the time. They'd ask a question and they would just say, I don't know. And I remember thinking, that is wild. I never heard anyone say that in corporate. I just think you have to maintain this front and this professionalism. And then you just say a load of stuff, that doesn't make sense. And I think it's just, you have to be yourself and be, and that's when you get respect. If you are that person who says, I don't know, if you don't, and you ask the question, or you say, I don't get why we're doing this, people will respect you for doing that.
And why does it not happen enough in large corporates? Why do people put this facade up?
Sometimes it covers, for the people who don't perform, it covers a multitude of other things, It's about getting by. But for the people who we're talking to, who listen to this podcast, I think don't act in that way just because you see other people doing that, And if someone genuinely doesn't know something, it's very obvious, If, like, for me, if someone explains something to you and you don't understand, it's because they don't understand, And if you want to be different and you do want to be the person who rises to the top, then just be honest, I think.
And let's take it from the scale-up startup side. I think it's very easy, or the temptation of looking up to the large corporates or hiring someone who's coming from a large corporate to set up treasury there. What can go wrong? Besides the fact that you have politics and facade and not admitting that they don't know, what else do you see going wrong?
I'll say I have seen other people who have spoken to me who have wanted to do what I'm doing. They've said, oh, I would love to do this fractional treasurer thing. That's really cool. I want to do that. And they try and do it and it doesn't work. Because treasury on a whole isn't the large corporate setting, then the banks and all the providers and all the ecosystem around treasury doesn't really work in a startup, because the people who support treasury, they're not interested in the smaller business. They don't have the time or the energy. Say you used a bank in a corporate, and if you work at P&G they are at you all the time. Hey, come to this lovely dinner. Can I sell you this? Can I do this? If you work with the same bank in a scale up, you don't even have a contact to speak to. And also, in a lot of the creditworthy calculations, you're not creditworthy because you're cash burn. A lot of the metrics that Treasury is measured with don't work in the startup scale up. So it's just a very different type of relationship. It's a very different job where at the start, maybe you're fighting for attention or you're fighting for this business. And then when you build up the relationship and they're on side, then you start to get the support that you need. But I do meet a lot of really frustrated founders who are trying to do a lot of set of treasury operations, and they're struggling, So it's different, but I would say there's a lot more providers, a lot more technology now in the space ready to support these scale-ups because they see the opportunity there, especially in the fintech side, I think.
Can you give some examples of this?
Yeah, of course. So I guess a big one, every CFO gets hounded by FX brokers. How many phone calls we get from FX salespeople is relentless. And in a big corporate, obviously you have access to your FX salespeople, your network of individuals. You learn how to manage them and you have a policy that supports you and protects you. Great. All the other people, they are being contacted by salespeople. They're being told constantly, the market's going to dip today. You need to trade today. The market's going to go up tomorrow. You need to trade now. All this urgency. And there wasn't really anyone who was speaking their language. But now there's multiple platforms in that space. You don't have to contact FX sales desks because that's a task in itself. There's automation. They're very low cost, very tight spreads. You don't have to actively manage and monitor those type of things like a treasurer would. A treasurer is always benchmarking their spreads because they know they get turned up, when you're not looking, and then you negotiate them back down and then they go back up. No one in a scale-up has time to do that. They just need automated, easy, quick processes that work. That is 0.05% of their job, And yeah, like I say, there's loads of good ones. I'm happy to name some like Bound or Hedge Flows and all these guys. Like they're really great tools. And this, like I say, that covers similarly investment platforms, the same. That's being democratized now for everyone.
Do you have some names for that as well? Some examples?
Yeah, of course. Like Treasury Spring is great. Love those guys. There is, for smaller deposits like Flagstone, Round Treasuries doing really good things. People who are giving the time to these type of CFOs and these finance teams to get them up to speed as well, because there is a hand-holding piece, to get them ready. And then great platforms, easy to use, it's done.
And so what I hear from you, these platforms are initially tailored or catered for smaller companies. Scale-ups and startups in your context, we don't have the time, we don't have a full-time treasurer, we just don't have the time, the energy, or the budgets to spend chasing the banks. The banks seems not to be, or the big players seem not to be so interested in these personas anyway. That's the status quo. Is there also an opportunity then for the large corporates to look into these automated, fresh techs and solutions, or not? And if not, why not?
I think there is. Let's say Treasury Spring is absolutely like a fantastic platform. I think it's very scalable to every size of business. I was actually recently in a conversation with another company that I work with to whether this process would ever be automated in a corporate. Would it be so formulaic that you could say, if my balance is over 1 million, 10 million buffer, 100 million buffer above my forecast, would I automatically start investing and sweeping that cash? And therefore, if it's needed in 1 week, it would go to my money market fund. If it was needed for 1 month, it would go there. And it was all automated. And I think there is something in that. But I think there's also something in a conversation I had with James Kelly once about that's almost the most exciting part of being in Treasury. Booking the trades, doing the investments, having those discussions, where's best to put this money? It's not always where the highest yield is. And making these decisions, I think you do want to keep some control over that. And if you do enjoy doing it, keep doing it. Automate the other stuff, automate your cash forecast. So then you're just doing the exciting decision making, managing the portfolio. I think you also have to think, I'll add one tiny thing, is how you spend your day and how you spend your time. And, I know we'll come to this, I'm sure, about hiring younger people, attracting people into our industry, that I think do the exciting stuff and automate all the rubbish stuff,
When Jen, on that, I hear you saying deciding where to invest, you can automate it. But if you have the luxury, and as a treasurer, if that's what you enjoy, don't just go to where you get the highest yield. What else is there to consider?
I guess the usual, the wallet share, you need to manage your panel of banks.
What is the wallet share?
So if you have 5 big bank relationships, or 2, or however many you have, and those banks give you other business, like maybe you have your syndicated loan with them, you will want to split your business between those banks, and give them their fair share of business. And in return, they give you favourable rates or they will loan you more, or whatever is important to your business at that time. And so you might decide, well, we should put our money here because we haven't given much business to those guys this year. So let's put some of our deposits here, or let's give them some of our FX trades, even though they're not the most competitive. And that's a conversation to be had. And then this is because a big part of being in Treasury is those relationships, them supporting you, your business, you as a person. These relationships go on for decades and decades, and it's a two-way street. So that's definitely a reason why you would divide. And also other things like counterparty risk and stuff like that. No one's going to lump all their money in one bank, especially, not that the banks that we work with are going to collapse. Now it's the cyber risk, the platform's down. If you had all your money in one place and they were attacked, and you couldn't access it, that could end your business, and people are much more, there's a lot of chat about that now, I think, the impact of the risk of managing all these huge transactions.
And how does that apply? That's in the context of a large corporate. How does that apply in the context of a smaller company?
It's even more important, I think, because the people who we've got, I'm sitting next to you, as every treasurer, a bag full of tokens, bank logins and tokens, stuff like that. And, the people who are managing that in the scale-ups, they're not logging in every day. They're not treasurers. We have this a small finance team, and therefore everyone has bank access. Maybe they're not maintaining it as they should. So say you use a traditional bank that has a token that comes in the post, like they do, and you have an office day on a Wednesday, say you all meet together, at least 2 or 3 people need to bring in those tokens to make payments. Otherwise it doesn't work. So that's quite a big ask, that people do remember to do that every week. And therefore it is quite good having a couple of banks, for operationally, to make sure that you can always access the money. If someone goes on holiday and all of a sudden there's only 2 of you who have the bank access, it is quite stressful. And I think in the scale up, it's very annoying because it's often the CFO who has to do it, or the financial controller. Managing bank access it's got to be the worst job.
Would you really advise a smaller company to do wallet sharing, wallet sizing?
Yeah, 100%. At least 2 banks, always.
And what else? Suppose you go into a smaller company and your first 100 days, what are the top 3 things you look at in your first 100 days?
Yeah, it's a good question. I would say often the big one is, can you get our money in good interest straight away? That's like the top priority. It looks great in the board pack. It's great metrics. It's great ROI. It's just often the first one. And then next biggest risk often is FX, because the companies that I work with do have to have interest in treasury risk. Otherwise, they don't need support. And so often FX is the second one. There's always a question then, what do you think of my bank? Do you like my bank? And I don't often push people to move banks, but I think adding an extra bank often. And then how I'd like to round it out is, say there wasn't any other big questions, there wasn't debt or anything like that, end with the Treasury policy. We've ticked off all the main buckets that you wanted to cover, all your different Treasury risks. See, obviously there could be cash forecasting that they often come, I'd say, with a forecast, because when you're managing cash burn and you've got big investment, they're obviously tracking the cash quite closely. So there will be work on the forecast as part of this project, because how can you invest? How can you manage FX without a forecast? But that's more just iterations. And then, like I say, end with a Treasury policy. We've covered here liquidity risk, op risk, FX, long-term liquidity risk, all the big ones, credit risk, market risk, whatever. A tight policy, some nice documentation, and then hand it over to the finance team. What's nice is when they feel confident to run it, I feel weirdly proud sometimes when I leave and they're running hedging processes and investment policies. And then we move into more, I'm always here, if you want me to check, how things are going. And it's often like a quarterly review, half-year review, how is it working? I think half of it is the policy and the other half is emotional, because there is, when you're working with founders, it's their money, it's their business, it's very hard to make these decisions. It's not like a corporate where you're sort of devoid from the money, it's shareholders' money. So you have that agency problem, but it is very formulaic, where I think in a startup, it's very emotional. Moving someone away from that into something more proactive, not responsive. Something's all this stuff's kicked off, US GDP rate, cable's gone, and everything's so expensive, that's okay. And the CFO says, that's okay. We had this planned. But our risk is managed. Don't worry. We're hedged. We're not going to see a huge business impact, not for at least 6 months or 1 year. We've cut out that volatility, our interest rates locked, and having the CFO be prepared in that way for those obvious questions from the board it's just great, and that's the whole point. I think making the CFO look great is the whole point of the treasurer.
Small and large?
Yeah, that's your job, isn't it? That's everyone's job, isn't it? Your job is to make your boss look good. That is it.
I have actually many questions. You said your first 100 days, the things that you would do. It was quite a lot. And there are two I'd like to narrow down. One, you mentioned if you don't already have another banking relationships, look into that. And the other thing, you spoke about forecasting. Let's talk about the banking first. What are you looking at when you're looking for a second or another banking relationship? What is a good bank for you?
For me, the best banks are, the customer service is good and responsive, and the platform is easy to use. And they're the two big ones, in this space, In some banks, we all know they're very hard to work with, some still need scanned documents to add users and stuff, and no startups are doing that. But whenever they have those banks, often they keep their money there, and then slowly people lose access, and then it just becomes so hard to manage. So that's priority. All for having a traditional high street bank and supplementing it with more of like a neobank, that you can add people easily, you can make payments, you can keep the business running if you have to, and you use it for that purpose. And then ideally you have some sort of investment portfolio as well on the side. So I think that hopefully answers that question. And I have used every bank platform, I think, that I can think of, and some are definitely a lot easier to administer than others,
So your advice would be have one traditional brick and mortar bank and then have one neobank, Revolut, Wise, N26, something like that.
Yeah. I'd say, I wouldn't always say Wise, because I don't think the access controls are great either, but exactly, like a Revolut or something like that. That's just easy to add someone, make your supply payments, or there's platforms as well that you can make your supply payments through them. It's automated through ERP. That's a great solution. just something that doesn't take too much headache to maintain,
And does that apply to large corporates as well?
No.
Why not?
No. And I think they need the support of the corporate banks, but also they have more time and space to administer a proper bank. I don't think any corporate should use a non-credit worthy bank, but not non-credit worthy, but not a super high investment grade bank. But like I say, they have a middle office function who is responsible for all of that type of administration. And, the real automation for them comes from the larger banks. They can connect to the APIs, they can link them up to the ERPs. They have host-to-host connections and stuff like that. So they're less likely to be logging into the banks anyway. Obviously, that automation is available to scale-ups too. But I don't know if you've ever met a scale-up where they say, let's stop our engineers from building our customer-facing platform. Let's focus on our back office finance team, connect them to APIs. So that's just never going to happen. And so, that, I guess that's always going to be the challenge in the scale-up.
All right. And the other part of the question was the treasury tech. You mentioned forecasting. I guess visibility comes with it as well as a prerequisite. What's your take on treasury tech or TMS, treasury management system, for a smaller company or scale-up company compared to a large corporate, for example?
I think you have to be a certain complexity to get the benefits from a TMS, of any size really, because it's something to maintain. It's a whole other system, Say you've got a small finance team who is posting all the bank statements and doing all the accountancy, and then they have to do it all again, in a TMS. I don't think to justify a TMS, it really needs a person who's going to maintain it, who has, multiple entities. Maybe they're consolidating information from overseas subsidiaries. That's where the real benefits come in. I think that the scale-ups do forecasting generally, very well. They have often the FP&A team have very complex forecasts that they share with the board. They run scenarios. There's just that exercise to translate it into a cash forecast, and sometimes that is less. And maybe it doesn't get as much attention as it needs to. I have tried a few of the different tools like Anaplan, Model Builder, done that piece. And again, that tools like that are great, but they're a big investment to get them going. And when you leave, when you move on, you need another model builder to take it on, so it's very hard to maintain. So a lot of people are moving to AI to maintain. Well, yes, to maintain. I don't think they're building their forecast with AI, but they have their forecast structure. They have information that they can now reformat their data to get it into the forecast. And the best bit is that it can check for errors, because when you run in an Excel forecast, always, every time and it's always the FX rate. That's all. Oh, we've got this huge FX difference. But yeah, I haven't seen an amazing AI self-built forecast yet.
And for the cash visibility bit?
For the startups, this is still very manual. There's no real way around that just yet, unless you're going to invest quite a lot of time into it to get that live data. You're going to have to log in, you're going to have to check. But I think it's so important, if you get it really tight, you can do it in 5 or 10 minutes. And it could save you a day if an issue where you haven't checked and you haven't funded, and then money's gone out, and it's, I think those little controls, although they feel like they're taking time, they actually save a lot of time. It's people who aren't treating cash management like a process. They're treating it as like an afterthought. They probably spend way more time managing cash than the people who just log in and do it every day.
Why is it?
An example, there's a corporate tax payment going out next week. Everyone knows there's a corporate tax payment next week because the finance team's done the computation and they know what it is. But the act of, where are we going to get the money to fund this payment? And that almost comes as an afterthought. And then there's an absolute scramble to move money into the right place. It's running late. We need to make this payment, making phone calls. That would have been a 1-minute task. That seems like a one-off example, but it's every month. Oh, we have our big IT spend in dollars. We have our big AWS bill. Having the dollars ready for that is then, oh my goodness, that's 3 payments I need to pay in GP, convert to USD. It's due today. It's a direct debit. That's a day of stress.
How much more expensive would it be to work in emergency mode? So, we have a problem. I need to get the cash now in the right currency, dollars, and do that in emergency mode rather than having a proper forecast, plan it ahead and say, okay, next week I'll need $200K to do the payment. What is the delta?
Sometimes you win and sometimes you lose. That's the thing, isn't it? The market is just like this every day, and you just don't know. If you need $200,000, you don't know how much it's going to cost. So if you've planned and you've got a hedge, even if it's just like this, at least you know what it's going to be and you can put it in your forecast. And, one of the things that I say when I meet CFOs, they say, I'm autonomous. The founder, he or she implicitly trusts me, to execute this, and we can work on this together. And I manage the whole finance team, and I'm autonomous in that sense. And I disagree completely with that sentiment. Imagine if I said to you, Phil, here's my credit card. I have 2 children and a mortgage. Will you pay those, please? And feed everyone, and I trust you. It's mad. You don't know I don't know how much you're going to spend to do that or how you're going to do it. And that's in theory. If you don't have a treasury policy, that's what you're doing. You're just saying to someone, the money's in the bank. We'll do a budget. We'll not track it too closely, but just you do how you feel is best. And I think that is. And then if something goes wrong, I said to you, you have my card. That's my fault, isn't it? That I didn't give you the parameters to do that. And it's the same for the FX. You would never even just to go on holiday and just walk over to some random provider and say, oh, give me all of my holiday money in whatever rate. I don't mind. It's just, I think it's that agency thing we're talking about.
So what do you do instead? How should it be done?
You agree together, what's the best way. You say, I don't want you to trust me. I want you to be clear how we should do this together. And I want to teach you as well, like how I like to do it. And if I don't have a view how to do it, let's create a view and let's make a plan. And let's not be caught on the back foot, and let's have good metrics. I want you to tell me at the end of each month how much you've spent doing that stuff and what the rates were, and make them really good numbers that is really clear to me how it's going. And then we don't have to talk about it again. I'm not worried about it. You're not worried. We're all agreed, and it's just running. And if it's not running itself, it's not going as we expected, we can regroup and we can decide, we might change the plan.
So that's the treasury policy bit that you were talking about.
Yeah, exactly.
Move past the tech and the treasury policy and this stuff for a second, and let's go a bit more on the personal things, on the people side of things. You mentioned at the beginning of the show that you fell in love with treasury as a young professional, and it almost happened by accident for you. So can you tell us, what did you love about treasury, and what did you wish you knew back then, and make the case for a young professional, maybe just coming out of uni today, to start their career in treasury today?
What is different about treasury to accountancy? I'm an accountant too. I'm ACCA, which is great. It ticks a lot of boxes, but it's not real. It's not live. It's backwards looking. You are reporting what's happened. You closing the books. It's very important. And it's quite. I very much see the appeal of that. But I think in treasury, what's going on in the news, that's what attracted me at first. We are discussing the FX rates, the current market. We get economic updates every day. We discuss them together but sometimes in my job at Norton Rose, we used to argue, we used to debate. we had different views, and I used to love that. It's a decision to be had, and we had a really good policy that allowed us the bandwidth to do that and make decisions and have a really good impact. And there's a lot of meeting people, also networking. Treasuries are really small, even in the biggest companies. They're small teams, so you won't have anyone to talk to unless you have a network. And Treasury is a really small world. Everyone knows everyone. In the law firm world, all the treasurers meet, every so often, and they say, "Oh, did that bank tell you about that? Have you tried that?" And you go to the ACT conferences or the ACT events, and people are great and they're really open and they share. When you do like ACCA, you're in a classroom full of people. ACT is not like that. It's like you're just doing it on your own. You'll be the only person at your company who's studying. And in that sense, you need the networks to know what a treasury is like everywhere else. It's what a treasury does in a law firm is completely different to a manufacturing company. It's different. Where in accountancy, it's much more consistent.
What is a good way to get started with building your network today? What are your top 3 tips?
Yeah, I think LinkedIn is your friend. People are very, obviously I do post on LinkedIn, but I do find that it does draw people. People do message, can we meet up? And, a lot of the time I would say yes, ask any questions. Obviously the ACT events are great. Davina, who's taken over the BD side at ACT, is putting on a lot more events. Like say she's leading a lot of new events, women or female orientated events, because it is a very male heavy industry. A lot more events at the Future Leaders group, which I'm part of, to bring students together. And the AC have started giving tickets to the bigger events to students, which is great. So they get to experience that. And also the banks, the banks do loads of breakfasts and talks. Just go to them. I would say, especially if you're an analyst, just go and walk up to people. And everyone feels as awkward as you do. If you walk up to someone and you just say, "Hey, can I talk to you, please? What do you do in your treasury?" They will love that. They, "Oh, thank God someone spoke to me." Or even if people are in there, sometimes you go to an event and people are with a little group they already know from their work, and you think, "Oh, everyone's in little cliques." You go over to those cliques, and those people have sat together every day for 3 years, and you're like, "Thank goodness someone has come over to talk about something new because we have nothing to say." I think, people just be that person, and I'll say one last thing on this. My last tip is everyone is so thinking about themselves. They're thinking, "Oh, does my hair look right?" Or, they're not thinking about you. You can, if you're just yourself and you're nice, whatever you post on LinkedIn, as long as it's not rude or offensive, it doesn't matter. People just think it's cool that you did post on LinkedIn. The only person who's really worried is you. Will be reading your post and feeling bad that they didn't post something. I think once you let go of that networking and the personal brand and all that stuff, it just sort of comes naturally.
Yeah, thanks. I recognize all the things that you said. We met on LinkedIn, isn't it? And here you are on this show talking to us. So you just reached out. Agree. Well, I think we have covered a lot already. I feel we could talk on for another hour or so, but I think it's time to wrap it up, and maybe we'll have you on the show soon again. And we have a tradition. Well, we started a tradition on this show. And that is the one thing tradition. So I'd like to ask you, what is the one thing you want to tell the listeners in 1 minute? What is the most important thing they should take away from you today?
The one thing you should do is you should treat your job like this is your business. Bring yourself to it, make it yours, speak about yourself, learn about other people, but act like the owner of that company in your job. That treasury analyst job or manager or treasurer, whatever it is only yours. Only you can do it. Bring all of your skills to it. And write about it on LinkedIn, write your blogs about it, ask if you can speak to the ACT about it. You know, they would love, reach out to Davina. She would, I'm sure, support you in doing that and make that your thing,
Super. Well, Jen, thanks a lot for being with us today. Thanks for sharing your wisdom and your experience. And till next time.
Thank you.